to start having a look into the email exchanges and start getting an idea on the questions that I've had received over the past few weeks. Sorry, I messed up there. Yeah, it was really interesting, Jordan. Thank you, Heather. I've been thinking that the carry trade is going to become a thing again now that interest rates are on the rise. Yeah, interest rates are a very what do I say here? A very heavy topic at the moment. It's held in very high regard. A lot of people are talking about interest rates, even people that don't trade. A lot of conversations about interest rates, so they're very heavy at the moment. But without further ado, let's get into some emails. Stephen, good old Stephen, sent me an email earlier this week. It said, please, could you talk us through in more detail why you're choosing the trades you take? I gather you look at reducing tick volume along with reducing price action, and I can see the reason for TP1 and TP2 levels based on previous highs and lows, etc. Okay. Obviously the email had a little bit more than that, so let me just open it. Can you talk us through the decision to go long or short on a pair in a way that we can write it down? Yeah, that's okay. I'll try my best. I don't know if this was prior to you going to look at the webinar where I described my trading strategy or after that, Stephen, but I'll try my best to do this, okay? I look for fading plays in the market. So I look for lower volatile markets at lower volatile times, okay? Asian session, close of the US session, like really when the markets begin to tighten. And I'm looking for an extension of price, a move, let's say. If we're in a low volatile market and we get a decent move, usually doesn't have the legs to sustain that move. So I'm looking for a push into a strong area, which I use volume profile to define these areas. As we push into these strong areas, I'm looking for a gradual decrease in tick volume. So this is where people are getting interested in the price. If you're getting a gradual decrease, and I mean, it needs to be over time, like I'm talking at least like maybe 20 candles of a gradual decrease coming out, a downtrend in the volume, pushing up into that. If we're seeing a bit of a slow in price action as well, it definitely does help. And then I look to short or go long. If we're extended down, I'm going to look to go long. If we're extended up, I'm going to look to go short. And I'll look to fade those price levels. Now, take profit 1 and take profit 2s, they're heavy take profits. And the reason they're heavy take profits is because when you're looking to do a fade play, you never know whether you've hit the top, hit the bottom, or whether you've just hit a pullback. 6 out of 10 times you'll just hit a pullback. Sometimes you'll manage to get the absolute top. So when you're trading these levels, it's important to take money off the table when you are given it, because you don't know how long it's going to last. You don't understand, realistically how much room we have to move based on this bounce. So yeah, as a whole, in more detail, I look for an extension into a strong area, drop in volume, a slow in price to show me that buyers are losing interest, and then I fade it. Realistically, I look for every reason why buyers are losing interest, and then I join the sellers. Vice versa, if we're moving down, I look for every reason that shorters are done, and then I join the buyers. It's quite simple when you really read into it. A little bit more complex when you're trading it, but as a whole, that's as simple as it gets. But thank you for your question, Stephen. I greatly appreciate sending the email. Feel free to send plenty more to that email, and I'll answer them when I get the chance to. Siddarth asked this in our New York trading session a little bit earlier, but I wanted to put it in here. In a recession year, do you think the stock market will rally? If not, then money will flow back into gold and the US dollar. And this is where it was really interesting, because I was talking about the whole transition effect, right? The fact that simple buy and hold parameters aren't going to be what we're assuming they are. And it goes into that topic of interest rates. I can't remember the year it was. But this has happened previously, right? We had a large jump in inflation, and we extended ourselves and our interest rates to bring that in, and then we released our interest rates too early. We thought we had stumped inflation, and we hadn't. and we released our interest rates too early, and lo and behold, it created this absolute buying spree of everything because everyone could still afford everything in the housing market, in the car market, in everything, right? Prices went straight back through the roof, and we ended up having to bring interest rates all the way up to like 20%. Like, they were high interest rates in order to bring this down. Excuse me. And we're really sitting in an area where this could happen again. And I discussed this in the New York trading room. It's scary. It's scary because we're seeing slow turns to the downside in inflation. Okay. And we're already seeing a slower, less aggression. I'll say less aggression in hiking interest rates. And it might be a little bit too soon. Now, I've changed my outlook on this, okay? At first, I was like, yeah, fair enough. We've got inflation. Let's start flattening out that interest rate and get back to normal levels. But now I'm starting to think, well, and I spoke about this, everyone's still got money. Most people still have money. Most people are still paying their mortgage. Most people are still, well, yes, okay, they got less. Sure. They got less money than what they did. But they don't have no money. Like, they're not seriously struggling. Now, it might be a different scenario in America. It might be a different scenario in the UK or in Europe. But at least what I see here in Melbourne, I'm not seeing a whole lot of people struggle. And my worry is they decrease these interest rates, or they top these interest rates here, and then start lowering the interest rate to increase. I've got no idea what's going on. Apologies. Increase the demand and the spending in the economy. And the moment they drop those interest rates, I mean, first time buyers are going to go absolutely nuts to get loans, to get mortgages. Everyone's going to think that's done and dusted. Inflation's finished. And they're going to go on a massive buying spree and cause more inflation. Same with businesses getting business loans and a load of startups, etc. And it's just going to go absolutely nuts. And that's what I'm really worried about, because if that does happen, what interest rate do you need to hike to, and how quickly, in order to stump that? Because it'll be twice, if not 3 times as bad as what we're currently sitting at. And while I can see the Fed, they've spoken about it, and they've said that they've looked into the history of interest rates and how it's handled previously. They have mentioned it. And that's why they're being a little bit more aggressive than what we're seeing in other economies. And they continue to hike this interest rate, as I believe they should. I think these interest rates still need to get a bit higher. Yes, we're seeing a slow in inflation, but let's really make sure we stump this down. You know what I mean? In my opinion. So it's a little bit worrying, because in the event that we have done it and interest rates start coming back down, yes, the stock market, I think, will look more advertising. The stock market may produce better returns than what we've seen. In the event we open up, I say we open up, not open up. In the event that we do lower our interest rates and the stock markets begin to rally, that's evidence of the buying spree. And if inflation kicks back up again, well, interest rates are going to go to the moon. So how will the stock market react then? I don't think it'll go too great. So that's the risk event of 2023, 2024, is how well have we beat inflation? How well are we managing it? And in the event that we do mess up and it goes a little crazy, how well are we going to be able to get back on top of it? So 2023, I think people will go bullish. Sorry, I'm playing with a toy here. I think people will go bullish in the stock market, and I think you'll see some gains. But it all depends on how the year plays out later in the year. First 6 months, I think you may see some gains. All right, I think it might be nice to build a portfolio, kind of diversify in there. Look, you can get a good rate on bonds at the moment too. But anything after that, I just think it's so risky. I just think there's so much risk on, and it all depends on how we keep hiking. If we keep hiking interest rates, sweet. I reckon you can start looking bullish stocks, but we need to like keep hiking interest rates like another 2%, in my opinion, which is heavy, but it's gonna make sure we're done. You know what I mean? It's gonna make, well, it might make sure, but yeah, it's a real tough one, and it's a real nail biter and nail grinder in order to try and figure it out, because it's scary. Because if you get it wrong, we're in serious economic conditions here, right? And everyone's like, the media's like, oh, we're in a recession, I don't feel like I'm in a recession personally. I'm not sure if anyone in this chat, maybe some of you are finding it a little bit tougher than what you have previously. Does anyone feel like they're you don't have to answer this because obviously it's going to be personal information, but does anyone here feel like they're really in a recession? Like, do you feel like the spending that you can see around you, maybe your personal spending, how you spend your time, how you spend your money, do you feel like you're in a recession? Because personally, I don't feel like I am. At least in, yeah, the media is blowing this up like it's the worst thing to happen since 2008. But like, I just don't feel anywhere near the same amount of pain. And I'm a little bit worried that if we open up these interest rates too early, that the pain I am going to feel, because it'll change. It'll change massively. So gas prices hit you hard? Yeah, okay. So gas prices, you're feeling the gas prices. Okay, so okay. Yeah, I'm just trying to get a bit of an understanding from other people's perspective as well. Material costs in the UK are getting extended. I understand that, but nope. I declined a pay rise in work, kept same pay for less than 4 hours of work. Yeah. It's kind of what I'm getting at. Like, yes, okay, we can notice some higher costs. Don't get me wrong, Rickbat. Yeah, gas prices are up, material costs are up. Yes, we can notice that, right? And we're seeing that they're up, and we go, but exactly, customers are still paying. And that's my point. If we're in serious financial trouble, customers would stop paying, right? You'd stop buying fuel for your car. You'd catch the bus. Yeah. You take that pay rise, Stephen, because you really need it. It's, yeah. Americans are feeling, we've been spoiled with low inflation and low interest rates here in Australia as well. Don't get me wrong, but it's that fact that like the media is blowing it out like everyone's in economic turmoil, and I'm just not seeing. I'm seeing everyone still pay. I'm seeing everyone still afford to pay these higher prices, and still paying the higher prices. Excuse me. So when they're still paying, they're not in economic trouble, right? Realistically, because they're still justifying paying it. And if that's the top of our economic issue, if we lower interest rates now and we can get access to cheaper loans, even though we can still afford to pay what we're already paying, I just think shit has the possibility to really hit the fan. And I'm a little bit worried about it. Because, yeah, I'm not, yes, prices are higher. Yeah, and it sucks. It sucks, right? Prices are high, like food, everything. Yeah, they're a little bit higher, but everyone can still afford it and everyone's still paying. Unless like you're really struggling financially. But that would have been something that was happening prior to these economic conditions anyway. If it's really hit you that hard, it's just a interesting. I don't want to be insensitive, and I don't want to upset anyone in what I'm having a chat about here. So please don't take anything by heart. I'm just sharing my opinion and where I can see the worry from my side is that we act like the job's done. And it's not us that needs to do it. It's the RBA, it's the Fed, it's the Bank of Canada, the Bank of England. They're the ones that need to ensure that they do their job and they really squish this, because right now, spending's still up and people are still paying prices. People are still buying things. Yeah, just a bit worried. But it's a good question. Thank you, Siddarth. I appreciate it. And look, I spoke about that question for like 10 minutes, which is why I wanted to bring it over to email exchanges. So I appreciate your patience. And that was just something I want to have a chat about because it's scary. It is scary. Let's move on. Jerome, thank you for your email. Thank you very much. Can you discuss any notable challenges or obstacles you have faced in your trading career and how you overcome them? Yeah. Well, they are paying it or they're overextending their credit cards. Yeah. Yeah, well, maybe, yeah. I've never been a credit card person. I don't use a credit card. I don't have a credit card. I've never had a credit card. So I can't relate with how people are doing there. But with interest rates up, I'd assume you'd probably want to lean away from your credit card, right? But yeah, not everyone thinks the same way. But yeah, that's true, Heather. Might be a little bit different. Jerome, so any notable challenges or obstacles you face in your trading career? Yeah, Heather asking the real questions here. Cheers. It's good. It's good. It's good thinking, intuitive thinking, outside the box thinking, and they're good questions to ask. Notable challenges or obstacles. Other than getting to profitability, that was a tough one. Challenges was funding. Early in my trading was funding, but I feel like that's been resolved for most people. Obviously, when I was learning to trade, I never knew about the 5%ers or FTMO or Trade the Bull, all these funding firms. I never knew about them. It was either you raised money on your own through money management accounts or you went to a in-house trading firm. I went down the route of raising money on my own. That was horrible. I don't recommend doing that. It was disgusting. And then I discovered the 5%ers and whatnot. So the biggest obstacle there was getting enough money to make more money. But that's been resolved for most people because we have the 5%ers, we have Trade the Pool, we have etc. Which, guys, we now have, if you've never been to 5%ers or Trade the Pool, we now have affiliate accounts from TradeDelicious. So it does support us. So the links I forgot to put in the description, which is just great advertising by me. It's just fantastic. But yeah, I will put them in the description after this and it'll be in the video. So if you are interested in joining or having a look into the Fivers or Trade the Pool, feel free to click that link and have a look into them. It does support us directly into bringing more content to you guys. Look, the other challenge would be belief. Getting really deep in there. Let's talk about self-belief and also belief from the people around you. Especially if you're surrounded by people who aren't traders, okay, whether it be your husband, your wife, your family, your friends, whatever it is, if they're not traders and they don't understand trading and you explain to them that you are trading and the potential in trading, you'll get a lot of the questions like, dude, where's your Lamborghini? Where's your Ferrari? If you're making money in the stock market, prove it. At least I copped a lot of that. I did get a lot of that. And it can really provide you with a negative self-image because it can make you think, well, they're right. If I really know how to extract money from these markets, why don't I have those big luxury things? Why don't I have enough money to get those big luxury things? And it really, it spirals out of control, right? It gets a little bit nuts. And that was a big challenge. And it's tough to overcome. Now, my biggest advice for anyone who feels that pressure, whether it's be from an outside source, whether it be internally going, I'm not good enough, where's the money I should be making if I really know how to do this? My biggest advice is to get involved in a community of traders. Be surrounded by traders and only talk about trading with traders. Don't talk about trading to those. They don't care. I understand it's your passion and you want to have a chat about it. It's fun to talk about. You like talking about it. I'm the same. But definitely only chat about it to traders because no one else will understand you. They won't understand what you're trying to do, what you're trying to achieve, and how you go about it. Whenever you tell an outside individual about trading or investing, the first thing they ask you is, what tips do you have? Because they automatically assume Wolf of Wall Street type stuff, money, 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 money. And they look at you and you go, oh, you're money bags. And it's a real negative self-image for people who are seriously trying to achieve consistency in the market. I talk to the wife and kids about trading when I want them to leave my room. That works. But yeah, should have heard that before talking to my family about it. Yeah, but Rafa, like, what reaction did you get? What follow-up questions did you get, Rafa? It's always the same stuff. And you'll get a text message in 6 weeks being like, hey, I'm looking at investing. Where should I put my money? And it just builds this never, ever, 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 ever. And this is rule one. Rule one, like the biggest rule you can have. Never, ever, 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 ever give your family advice on an investment. Ever. Especially a trade. Never do it. I don't care how sweet, out of the park investment you think it is. Don't do it. Just trust me. Just trust me on that one. Never do it. It only ends badly. If it wins and they make money, they won't be strong enough to cash out when you say cash out. And they'll go on to lose money and they'll get upset. If it wins and they do cash out, they will absolutely love it and they'll be asking you every second week for more tips. If it loses, they're only going to blame you. So yeah, but yeah, that was the biggest challenge. Outside people looking in, and then me listening to what they were saying and building that negative self-image. It's a big issue. So in overcoming that, surround yourself by traders. Only talk about trading to traders. If you guys need an outlet to talk about trading, well, guess what? TradeDelicious is here, right here, every day. We're live. Come in, talk about trading. Get it off your chest. Get it off your chest. Let's have a chat. That's what we're at. That's what we're doing here. We're a community of traders. I'll understand. You can sit here and say, I've lost for 2 years straight. And you know what I'm going to do? Be like, okay, well, why? And question it. Whereas if you told, your cousin that you've lost for 2 years straight, they'd probably go, oh, you're a shit investor. Well, it might be true, right? But the fact is, you're chatting to the wrong people. So make sure you're talking to the wrong people. Make sure you're surrounded by people who understand what it is you're trying to do and how you're trying to do it. And that will help build your self-image. That'll help build your self-belief and moving forward. But great question, Jerome. I really appreciate you sending that in. I hope that made sense for everyone who's in the live chat right now as well. But yeah, it's just gambling. It's only a game. Can you buy me XYZ now? They're the questions you get. They're the rebuttals, because, and it's like, we can't blame them. They're not doing the wrong thing, right? It's just how they're thinking, and it's how most people think when outside people from investing or trading hear about investing and trading. It's how they think. It's the first thing they think about is money. So, and it's because we work in money. I mean, we trade money. We trade currencies mostly here, which is trading money. So it makes sense, but it's just a different playing field in knowledge, and it's not a difference in intellectual property. Don't get me wrong. I'm not calling them unintelligent or anything. They'll be absolute amazing people, but they just don't hold the same understanding of what it takes to be a trader and what process you have to go through in order to achieve profitability in trading. Therefore, you won't get that same emotional level of understanding when you're trying to talk about it. And it's very important that you choose who you talk about trading with. Have a friend, have someone you can message, have someone you can call and rant when, for example, Heather, Aussie dollar, Japanese yen doesn't do what you want to, or Rafa, you missed the trade which would have built you 8% of your balance. Have someone you can call and be like, dude, you wouldn't believe. Or come tune into TradeDelicious and have a chat with me. Thank you, Jerome. Great question. Ioalo. Sorry if I got that wrong. Can you discuss any specific techniques or methods you use to manage stress and emotions in trading? Time away would be my biggest method of managing stress. Like, especially if it comes into like burnout territory, getting away. And I don't just mean a holiday. All right, a holiday's good. The holiday is always good to get away. But I mean, just like little things like the weekend. Get away at the weekend. Turn your phone off. Looking for people to rant about it. That's why I'm here. Join in, Rafa. Rant. We should bring like a half an hour segment to TradeDelicious, which is just like call, or you guys call in and you just rant about trading. A good little outlet, and we just get to listen to you rant. Just have that. You wouldn't believe what happened to me. That could be on. We could do that. But Ioalo, yeah, time away. I mention this every Friday for anyone that joins in the Asian trading session rooms, right? Every Friday I go through this. It's a matter of getting away from the charts, spending some time with your friends and your family. Now you have rule number 1, which means you don't talk to your friends and family about trading unless they ask or they know trading. Okay? So go in. Yeah, it's classed as spread betting. Yeah, it doesn't help. Today, it was a mistrade. Thanks, everyone. No worries, Rafa. I understand your feeling, but you did the right thing. Yeah, well, get away. So on weekends, go do something. Get outside. Don't look at the charts. Don't look at the news. Markets are shut. Most of the markets shut. If you're a crypto trader, it works a little bit different, but most markets are shut. Use that time to get away, to reset yourself before the next week, to put the previous week behind you and the next week in front of you. Go out for dinner. No phone, no trading, no news, no trading talk. Go for a walk, go camping, go get out in the bush, go get on a plane and fly somewhere with a beach. Whatever it is you need to do, have an outlet. Right? Trading's fun and it's a passion, but it is a job. And if we do it consistently, guess what? You're going to burn out. You need to reset yourself because it carries a lot of stress, as you mentioned. It carries a lot of stress in trading. So you need to reset yourself and you need to rethink how you spend your time away from the charts and is it good emotional balance. Now, there's going to be plenty of people that can talk about healthy emotions and healthy physical attributes better than what I can. I'm not going to sit here and say do yoga every morning and meditate. Sure, it can help. I'm just explaining what helped for me. I'm not a big meditator, a big, that whole process that people go through. I've seen it improve people. Sure. Laugh all you can is a bloody great one, St. James. Laugh. Find people who can make you laugh. Find people that make you happy and go spend time with them. Best way to manage stress and emotions while trading is to be away from trading. Is to reset and then come back in. Now, I was a little bit more stressed when I was doing my more positional trading. Now that I'm day trading and I'm done by the end of the day, it definitely helps. I still feel the stress on the weekends when I'm in drawdown periods, but those are the times I really get away. I'll hop in the car and I'll go down the coast or I'll go out in the bush and go camping and I can't access my phone. I can't look at my portfolio. I can't do anything. It's just getting away. Take a break from the market every week, especially after a few losses. Exactly. You do woodworking. Look at that. Outstanding. There's got an outlet, Jan. You've got an outlet. That's what you need. And even better, if for what Jan's doing there, is if you can do something with your hands that provides a finished product. If you can do something where you can look at it and be proud of it in your spare time, even better. Because it'll lift yourself. Like, yeah, self-worth will go up a little bit. Like, yeah, I built that. Or, yeah, I achieved that. Even better. Sports are really good. Get good outlet. Get your anger out. There's a million different things you can do. It's all related to getting away from the charts, in my opinion. But great question. Thank you very much for sending that through. Pamela. How do you maintain a healthy work-life balance while trading, and how do you avoid burnout? I think I just answered that question, Pamela. I think I just answered that. Yeah, apologies, but I definitely did just answer that question. But same thing, get away. As soon as Friday market closes, or at least you're done trading on a Friday, get out. Go do some sport, do some leisurely stuff, move your body a little bit, go camping. I like camping. Go on holiday, go fine dining, whatever it is you're interested. Go walk your dog. If it is, go play with your dog a little bit. But then there's stress when I'm in a trade. It's a size too high. Maybe for me, it's been something else. I haven't placed a trade. Like go for a walk. Yeah. There are day-to-day stresses while trading that you need to manage. And 9 times out of 10, when people are really stressed when managing a trade, I tell them the same thing. You're positioning too high. Lower your lot size. 9 times out of 10, just lower your lot size, and that stress gets a little bit less. That's what I tell people, and it tends to work. If you're getting really stressed while in positions, you're probably positioned too large. But yeah, so there's a million different things to do, million different outlets. It's the same as a healthy work-life balance. I wouldn't consider I have a healthy work-life balance. Mine's a bit all over the place at the moment, so I wouldn't say that I'm the best person to provide advice with on this. I definitely reckon I could improve my work-life balance. I do a lot of work. I'm passionate about my work, both trading and TradeDelicious. So my work-life balance is a little bit integrated at the moment. I could probably do better with more life than less work. So I wouldn't take my advice on it, but I am happy. I'm enjoying what I do. So it's a tough one. The more professional you get, the more balance is important. This is I have to work on for myself. Yeah. Balance is very, very, very important. And once again, I reckon I lack a little bit in finding some good balance. So maybe I should get an expert in one day. Maybe I should speak to an expert on traders of money on how to improve work-life balance when it comes down to trading, because I could definitely look at improving my own. I know I can improve my own work-life balance. So it could be a topic for us to look into. I'm probably not the best to really dive into that, but avoiding burnout, I spend my weekends doing something. If I can spend my days after work as well, even better. Like for example, yesterday afternoon, I played a game of golf. I finished work. I went and teed off, played a couple hours of golf with a friend. Bit of physical exercise in there. Outlet, got to chat about stuff that wasn't work, just chatting to a mate, and I felt good. I came in Friday morning refreshed. Came in this morning, feeling fresh. So little outlets like that are really important. Oh, that's them all. We're through. That's everything, guys. That's exactly 2 hours of TradeDelicious Live. I hope you guys have enjoyed the content. That is all I have planned. So I appreciate every single one of you. If you did enjoy this longer live stream today, leave a like. If you're watching if you're watching Email Exchanges on the post recording, feel free to join us next week on Tuesday night, if you're in Eastern Standard Time. Feel free to join us because we do all this live. You can ask the questions. We can talk through different topics. I appreciate every single one of you joining me today. I look forward to seeing you later today, my time, tomorrow morning, your time. We have the London session, which I'm going to be doing with Ruben. And then we also have Mickey doing his best stocks of the day prior to the New York trading at the New York Stock Exchange opening up. So stick around. We'll be back in about 10 hours. In 10 hours, we will be back with more content. I appreciate every single one of you sticking through. Thank you for joining me on this glorious day. I wish you all the best. Have a great night. Switch off, and let's link up tomorrow. For most of you, tomorrow. Have a fantastic day, guys. It was an absolute pleasure, and I'll see you later. Cheers.